Africa Bitcoin Corporation.
We're the first company to do this on the African continent. That's listed. No one's ever done this.
Public. Regulated.
Profitable. Impacting African SMEs.
Africa Bitcoin Corporation. Retail investors can already buy Bitcoin easily through cryptocurrency exchanges. Why should they invest in Africa Bitcoin Corporation shares instead?
Actually, the ABC share is not a replacement at all for Bitcoin, and we don't intend it to be, right? But what you find in ABC is that it's one of the first times that a company is embedding Bitcoin into its capital architecture and structure, right? And that's what's different about it. So in the same way that banks have used gilts and government bonds and deposits and that kind of thing to structure their balance sheets, for the first time in Africa, we're using Bitcoin as part of the foundational structure of our balance sheet. So it's not intended to be a proxy for Bitcoin, though shareholders do, of course, get indirect exposure to Bitcoin as a function of it being part of our balance sheet, but that's not the idea. And the way we use that is to lower our cost of capital. And when a business is able to lower its cost of capital, it means that business can be more competitive. It means it can outprice its competition, and it means it can offer its services at a lower cost to its customers. And our service, of course, is loans to SMEs, and the lower SMEs can access funding, the more they can grow and the more jobs they can create as a consequence.
Given the current level of market volatility, geopolitical tensions, and uncertainty around events such as the conflict involving Iran, do you ever feel stressed or emotional about Bitcoin's price movements? More importantly, how do you protect the company's loan book from liquidation if the price of Bitcoin falls sharply?
Very conservative loan-to-value ratios. It's monitored daily as one of our risk mitigation techniques. And the loan-to-value ratio is managed always below 50% of the Bitcoin on the balance sheet. So we don't see that as risky at all. And in addition, we've got cash reserves so that we can top that up at any point should we need to.
I think there's a couple of things. I think we as philosophically as a business, we are proponents of people owning Bitcoin in the individual capacity, the way Bitcoin should always be owned, right? So we're not intending to be a Bitcoin proxy of any way or share, although we do measure ourselves in terms of Bitcoin per share. And one of our key objectives as a business is to ensure that we always increment Bitcoin per share over time. So that is that indirect exposure, yet it is a very tangible metric relative to our business. So we're always looking to raise Bitcoin. But I think what makes us very different from traditional Bitcoin treasury companies in the world today is that we're not just raising Bitcoin for the sake of seeing a number go up or a number go down. I think that's very, very important for us. Most of the Bitcoin treasury companies are really, you measure them because their core businesses are not really accretive or synergistic with their Bitcoin strategy. Their Bitcoin strategy is something that they manage completely autonomous from it. In Africa, that can't really work for us over here. In the northern hemisphere of the world, you get very low yields and you get very high rates of capital. In the southern hemisphere, broadly speaking, you get very low rates of capital and you get very high yields. So what we do with Bitcoin here is very different from what the other Bitcoin so-called treasury companies are doing. So we use Bitcoin to farm yields. So we've got high yields in the SMME lending business. And what we're doing is, simply put, we're utilizing Bitcoin as a lightsaber, as a mechanism to go into that world with a lower cost of capital, and we can more effectively and impactfully deploy capital into the SMME base on a Pan-African basis. For us, Bitcoin, that's the beauty of this asset class. So when you measure us, we're not too concerned about Bitcoin's price going up and down because we use it as collateral. And we use it as collateral in a very, very conservative way to unlock fiat capital that we bring to its knees, so sub 5%, that we can deploy into circa, 18% SMME loan, which is very competitive in South Africa. And if you go north of our border, 18 to 20% per annum is incredibly competitive, especially when you look at an SMME in Zimbabwe, where they're paying for a loan 20% per month. So if we can take Bitcoin enabled, empowered private credit into the Zimbabwean market, we can lower that cost of capital significantly for the SMME. And we think that changes lives tangibly. So our core business and our Bitcoin treasury, it's a flywheel. It's an engine that we've created, and it's a high impact engine. And just to segue kind of to a Safe, when we approach Safe, this is what we described to him relative to what we were doing. And I'll speak on his behalf for a second, and he can perhaps echo or chime in. But I think one of the things that the reason we did what we're doing, to be honest, the origins of that came from his literature. So if you read the Bitcoin standard and you read the fiat standard, in my opinion, when I look at it through an African lens, those books articulated to me this particular strategy where Bitcoin is something that can take traditional fiat currency, literally bring it to its knees, and you can start deploying it in this high impact way. And we believe this is what the asset was made for. But those learnings came from this literature that this gentleman wrote. So, he kind of burst that in our brains several years ago, at least for me, more than a decade ago now.
Safe. When the team first approached you, what did you think about their strategy of using Bitcoin as collateral? What convinced you to come on board and support Africa Bitcoin Corporation?
The case for the company is a distinct thing from Bitcoin. And, the way that I'd like to describe Bitcoin, the way I like to think of Bitcoin is that it is savings. It's a form of saving. And it's really just returning money to its original function of saving, which as humanity, we've always had. But it's become very difficult. It's very hard for people to do it. And so people need to become investors all the time. And you need to run your own hedge fund in order to be able to just maintain the wealth that you've already earned working your day job. So Bitcoin brings you back to that ability to save. And I think for most people, up until you reach a point where you've got maybe several multiples of your annual expenditures in savings, then you should, as you approach that point, you start thinking more and more that you're willing to take risks with your savings, that you're willing to move them into trying to maximize returns, trying to get returns out of them. So this is how I see the difference between these things. So I still think for the vast majority of people, I think the compelling case for investing in Bitcoin is overwhelming for pretty much everybody, because everybody needs money, everybody needs to use it. But only some people are willing to take a risk on a particular model that they find interesting. So in my case, the reason that I found this interesting was that it was truly it was an application of what I had seen as the strength of Bitcoin in a way that I had not really seen applied so well. Because in my mind and in my work, I explain as the process of saving intensifies as people are able to save wealth more. They become more and more capable of thinking of the future. They have more capital. They're able to produce more productively. So things become more future oriented, and that leads to more savings, which leads to more productivity, which leads to more savings. And then the abundance of saving results in a decline in the interest rate. The price of capital eventually declines over time as it becomes more and more abundant. And in my mind, I think this is what Bitcoin is going to bring about. And this is something that I sort of discuss in depth in my work, that I think we're going to be seeing this, that as people switch from having a form of money that depreciates over time, which then requires you to take risks and to take on leverage and to take on equity risk and all kinds of other risks involved in trying to secure a return to beat inflation, that makes capital more and more scarce, and it makes interest rates higher, and it makes it more difficult for people to secure financing, because we're trying to secure capital by putting it in leaky buckets, effectively. That's what fiat money is. You're trying to make water available for people, from people who are able to produce it to people who can consume it, but you have to go through a bunch of leaky buckets. And because of the leaky buckets, you're always losing capital, and you're always disincentivizing people from saving capital into the future. Because if you consume it today, you get more. If you save, you get less. So this, for me, is the interesting thing, because in my mind, I would say that over time, their ability to hold Bitcoin and the ability of a lot of their clients and users and borrowers and small businesses to accumulate Bitcoin and hold Bitcoin improves their credit worthiness and increases their reliability in terms of repayment, and increases their ability to secure more and more credit at lower and lower interest rates. So I see this as really, whenever you see a problem in markets, there's the academic way and there's the entrepreneurial way of approaching it. And so I say it with all regret that I'm very much an academic, in that, I'm very good at identifying the problem and moaning about it and writing best-selling books about it, and identifying how I think it's going to play out and what needs to happen and what should happen. But it's difficult for people like me to realize that every time you identify a problem, that is actually a market opportunity, and that there's a huge opportunity to be made there. And so essentially, this is what they are doing at the African Bitcoin Corporation. And this was kind of what got me interested in hearing about this, because it's taking that idea essentially and using it as a motivator for the business. We are going to make more and more capital available, and we're going to save it in Bitcoin. That's going to allow us to have more capital, and it's going to allow us to lend more, and then it's going to make everybody save in Bitcoin, and then they're becoming more and more future oriented and more credit worthy over time. And so everybody benefits.
You guys are kind of known to emulate or reference MicroStrategy often. Obviously, they're much bigger at scale, and they use convertible debt to buy Bitcoin, and you use it as collateral. How appropriate is their playbook in the African economy, where local currency depreciation is constantly hurting companies? And how have you kind of altered your approach to other treasury companies for the African environment?
So I don't think Strategy's playbook would work in Africa for a number of reasons. Now, what they do is they issue preferred shares, and they go at lengths to make sure that that preferred share stays at a particular price, right? Now, and they use the proceeds of that, and that's to manage volatility for people who don't like volatility, which Bitcoin has. And they pay out quite a high interest rate or dividend yield to lure customers or to attract investors into that product. Now, in Africa, the interest rate that Strategy pays right now is around 11.5%. And similar products in that market are around 13. In Africa, you can get government bonds, which have a sovereign guarantee and make around 18%. I shared stats with Stafford the other day where fixed income bond managers are returning in excess of 20% per annum to investors. A dividend yield of 11% just wouldn't fly in this country. Right. The second thing is because he holds the instrument at par, and because of our high inflation rates. So because he keeps the instrument at par, it's not growing in capital value at all. And so over time in Africa, that instrument will be degraded to something worthless over time. It's like keeping $100 bill under your mattress. Over time, our inflation rates will degrade that to almost nothing, even though you're earning a yield. But in Africa, you certainly need yield, but you also need instruments that deliver capital growth so that it constantly beats inflation. Otherwise, you're just going to be getting poorer and poorer and poorer. All right, guys, if you want to take a stab at it.
Let me take a stab at it. So just, pointedly to answer it is, what MicroStrategy and Saylor has done is very inspirational. When he did his first strategy conference, Warren and myself actually were in Orlando, and we attended that. And we've listened very intently, and we've watched that model. So if you had to combine what Michael Saylor's done with strategy, I think that works really well in markets where you've got very low yields, but you've got very deep capital pools. And so what essentially you're doing is you're utilizing Bitcoin to generate yield.
Yeah.
So he's taken Bitcoin and he's got his stock price that is MSTR, that has got max, amplified exposure to Bitcoin. And as you climb up his capital stack, right at the top is that thing called STRC. And what he's doing there is he's offering a yield to fixed income that they've never had before. So people that put their money into money markets, people that are looking to save fiat, but they don't want exposure to Bitcoin for many reasons. They may not understand Bitcoin, or their time preference is different. They're 75 years old, they've got X amount of fiat, and they know their fiat's leaking. What Saif just said there, their fiat's leaking through the bucket. And they want to make sure that they can get some dividends out of their fiat while they're still alive. STRC is a great tool. So instead of putting it into a money market that pays you out very, very low yields, and when you peg that relative to inflation, you're actually losing money. Why don't you go buy STRC? And I think that he's not really doing convertible debt anymore. He's actually drawing income from low yielding environments in the financial system, and he's sucking it in through STRC into his capital stack. And through that, he's buying Bitcoin. Now, that engine that he's created, and if you go up and down that capital stack, is unique. It's novel. It's incredible. He admits that a large part of the thinking that went into that structure was AI. And it's a beautiful thing that he's built. I mean, he's a MIT aeronautical space guy. So he knows how to build engines with cogs. So STRC is sitting at the top there with very, very low volatile exposure to Bitcoin. So it's got like a 1% exposure to the Bitcoin price. And you kind of go down to the base pyramid where MSTR sits, and that's amplified. So if Bitcoin goes down, it goes really down. If Bitcoin goes up, it goes really up. And if you take a look at how that torque works between the different cogs going up his capital stack, that's very unique. When we looked at that, we said, hey, here's someone for the first time being allowed to draw Bitcoin into their balance sheet, but not only do that, actually utilize the tool. And I think it set a precedent for us from a regulatory perspective to enable what we're doing, because there was a reference site. So when we approached the JSE as ABC, and we approached, South African Reserve Bank and FSCA and all these regulators that we had a lighthouse that we could point to. We could point to a company that was doing it responsibly, transparently, effectively. And so when we demonstrated what we wanted to do, we gave the inverse of that, where we could build something not to use this thing to generate yield, i.e. the 11% on the top of the cap stack, but something that could actually, bring down yields. Our yields are too high. Over time, what we want to see as ABC, yes, it increases our margin. We lend today at 12% and we borrow out at 18% to 20%, effectively and competitively, responsibly. If you look at our loan book's incredible. Our default rate in our loan book is less than 1% over the last 3 years. That's an incredible loan book. When you go anywhere in the world and we talk to them about our loan book, they're quite surprised by the status of our loan book and the default rates. And they're like, well, because they don't really understand the entrepreneurial depth in Africa and what people are doing over here. The problem that Africa has, it's got all this latent human potential, all these people inventing, they're using AI to do. We're very excited about AI because AI plus latent human African potential, the unlock there is significant. And ABC is simply taking Bitcoin and riding into that field and harvesting all the rewards from that by, in time, lowering the yield. We'd love to go to Zimbabwe and lend out at 10% per annum. Imagine we could do loans at 10% per annum in Zimbabwe. I mean, that is beyond life-changing. When a guy is servicing a loan today at 20% per month, if he can service a loan at 20% per month, and we come along and go, hey, hello, we can give you a loan, maybe double that loan because of all the securitization, and we give it to you at 10 to 18%, that is extraordinary. And that's the conviction that drives us. So yes, Saylor built something beautiful, created a reference site for, in a certain way, the regulators sat up, looked at it. And I think a lot of Bitcoin treasury companies followed that lead. We just had to look at it through an African lens. But it's not just the economic opportunity for us, it's kind of the human impact. I think Warren and I are very driven by that. Bitcoin is a beautiful thing for an African in its pure form, But in terms of its form inside of ABC, it actually speaks deeper to that conviction. Because as Africans that grew up in, I mean, I grew up in El Dorado Park, and, Warren also grew up in Akala Township. And, where we grew up, we know broken money. So like Safe sort of knows broken money. Michael Saylor doesn't know broken money. They speaks broken money. They can write books about broken money. We live broken money. That's a big difference between us. We see it every single day. So for us to take this organization, it's a beautiful financial services business, and then put this thermonuclear weapon inside of the engine and switch it on, that's the opportunity. I mean, and I think that takes us to a completely different level, and we can show something very different relative to this asset, which is quite exciting.
Africa Bitcoin Corporation has been steadily accumulating Bitcoin over time. Why does your strategy favor dollar cost averaging instead of making larger lump sum purchases?
So the way we accumulate Bitcoin, we need to understand, when you build a Bitcoin treasury business, you need to go back to first principles. It's quite tough. Okay, you need to get a regulator to come along with you. So to engage regulators and make sure that they understand what we're doing is a very complex thing. It's not an easy thing. So we've had to go through that process of making sure that the regulator understood that we were structured correctly. We had the people, process, technology, and governance to actually house the strategy. And that took a while. Then we had to make sure that our board was constituted correctly. If you take a look at the ABC board today, it's very different from what the ABC board looked like 12 to 24 months ago. So we had to make sure we had the proper acumen, capacity, capability, competency on the board. I was leading that for quite a while as the chairman of the board. And that means getting your board educated. That means making sure your board's comfortable with what you're doing, making sure you've got the right governance policies in place, etc. Now, the way you do that as a business, you can do that theoretically and you can write these policies, but you first got to, the best way to do it is actually to shoot the bullet through the barrel to make sure that the barrel's straight. So we started off very conservatively, dollar cost averaging, but it's not necessarily our strategy. Our strategy is conservative, it's transparent, it's open, it's extremely governed because we are a publicly traded company. And now we're on the main bourse of the JSE, which requires even more governance oversight. That takes a while, and we got to do that responsibly. And so we have to bring the board along. We need to make sure we're custodying this asset properly in a transparent way, according to the rules and regulations. We're the first company to do this on the African continent that's listed. No one's ever done this. So we are breaking new pathways. We're constantly being asked by the regulator to explain this, to show this. That takes a while. So while you see us building the stack, yes, we are not interested in a leaderboard. Warren and I don't sit and look at a leaderboard and go, oh, we're falling behind because we don't have 1,000, 2,000, 3,000 Bitcoin. That's not how we think about it. What we're thinking about right now is making sure that the foundation is so well set that we can truly build at scale beyond this. And I think you'll see in time, I can't forward or forecast anything, I'm not supposed to, but what we're building is foundational pieces that will allow us to scale rapidly once it all sets in. So we've put all the governance in place. The regulator understands. We've moved to the main bourse. That's just happened in the last 2 weeks. We're now trading on the main bourse. We're trading on OTCQB in the United States. We're trading on the Frankfurt bourse in Europe. And we're about to, well, and I can't say this, right? We're about to list on Aquis in the UK. And we're about to make ourselves available there. So jointly with dual listings across Africa, this takes time. And you need to do it responsibly, carefully. So what you see right now is single-digit Bitcoins, but that's simply because the engine is being built and it's being revved. And we're testing it. We're taking it on the track a few times. But I'm excited to see what lays ahead. Very excited. As a Bitcoiner, I can't wait to see what moves ahead in terms of capital raising in these different markets, and communicating our strategy more broadly and bringing investors in so we can really, take this to the next level.
You have said you are Bitcoin maximalists. Why is Bitcoin essentially ideal for something like this, where the advantage is exaggerated in Africa in comparison to the rest of the world?
Yeah, I think the key thing that distinguishes Bitcoin from every other monetary asset that we have is that it is the only one that credibly has a fixed supply. And that sounds like it's a small deal initially, okay, so what? But if you really work through the implications of this fact, and you think about what it means in the long term, it becomes pretty clear that this is a very significant issue. Because with every other form of money, whatever it is, there's always somebody who's able to make more of it. And then the more that people use it as money, the more the producers have an incentive to make more of it. So whatever it is, whether it's gold or copper or zinc, or if it's real estate, if people are investing in real estate, if people are investing in stocks, if people invest in bonds, government bonds, if people start investing in that, then governments are just going to borrow enormous quantities of wealth and destroy the currency in an attempt to pay it off. So whatever it is that people use as a form of money will provide the producers with an incentive to amplify it enormously and produce more and more and more of it. And Bitcoin is the first and only thing that we have that completely resists this. The supply of Bitcoin is completely inelastic and completely irresponsive to changes in demand. Doesn't matter how many people get in or out. And so that's what distinguishes it from other digital assets and from other assets in general. Because with other digital assets, you might be able to theoretically on paper say that this is a fixed sum, a fixed quantity of money. And ability to influence it. But it's fair to say that the mere presence of the credible possibility that somebody might be able to alter the supply results in that being a distinct possibility. It might actually happen. And therefore, it's not something that serious investors would consider allocate money to. And so they will all remain in this kind of purgatory of being tiny little speculative stories that get hyped up by influencers and try and pump their bags and sell their pre-mines. And, some people might make money playing those game, but it's a negative sum game. It's not even a zero sum game. It's a negative sum game. And the end result is with the vast majority of people who play this game would be far better off if they just don't play it. But Bitcoin is the only one where nobody can change the supply, and anybody who tries ends up studying it and figures out quite quickly why you can't fix the supply and why you can't change it and why you shouldn't even be trying. And that therefore makes them become a big Bitcoin believer, which is kind of what happened to me.
Have you seen similar successes or companies globally besides the big names like MicroStrategy? And how are you seeing that they're actually succeeding with Bitcoin backing?
So I think the unsung heroes in this story are the many thousands of businesses around the world who use Bitcoin as their treasury asset, and this has worked out very well for them. People who have started doing this several years ago, the value of the average dollar income that was then put into Bitcoin has most likely gone up over this period, even though, even with the recent crash, over long time horizons, if you're accumulating over time, you are letting the volatility work in your favor rather than against you. So it works out well for a business that has cash flow. I think this is really the key way in which businesses use it. Now, the other kind of more aggressive treasury models that are out there, Michael Saylor's MicroStrategy, or Strategy now, is the big one, and it's done an incredible job. It's increased the size of the company by many orders of magnitude, and it is very popular in the financial markets. Beyond that, I'm not very familiar with the rest of the companies, I think the Africa Bitcoin Corporation is the only one that I have come across that is integrating Bitcoin into its business model in a serious way. I with the long-term vision for making it part of how they operate, and I think this is really why I think it's a little different from the rest. And I think over time it's going to become more and more obvious for more and more people why.
With your capital accumulation and continuous buying of Bitcoin, do you have a timeline in mind and an ultimate goal in mind? What do you see as success for Africa Bitcoin Corporation?
We want as many of the 21 million as possible. But success for us is going to be measured not only in the number of Bitcoin we've achieved, but how we've used that to lower the cost of capital. If we're able to lower the cost of capital, not only for ourselves, but for the SMEs in Africa and the number of jobs. So there's multiple hurdles that we're trying to scale. And so the number of Bitcoin is almost irrelevant. We do want as many as possible because that makes the other missions more probable, or the other objectives and achieving them more probable. But it's job creation, lowering the cost of capital, not only for ourselves, but for the other SMEs that we serve, and then getting as much Bitcoin as possible, because we think that unlocks the ability to close out on the other objectives.
Well, let me just add to what Warren's saying there. So there's a multiple ways you accumulate Bitcoin, right? So if you take a look at Bitcoin treasury companies, generically speaking, in an accretive way, they issue out equity, they sell the equity, they buy Bitcoin, right? Yeah. So there's like some type of accretion flywheel there, as they move. That is definitely part of our strategy, and that's what we've done. We've done private placements, we've sold equity, we bought Bitcoin. We've done it in other ways too, where we've actually used it as collateral, where we extract something out of it and we increment it back Bitcoin. But to us, what is more sustainable and what we want the flywheel to kick in is if we can increment the amount of SMMEs out there that we're funding, that increments the profitability of the business, that increments the revenue stream of the business, and that entail cascades back into the treasury. So I don't want to go off on a massive fundraising campaign in the long term to continually buy Bitcoin. I want to buy Bitcoin by having my SMMEs build up so much capability and wealth where I'm deploying so much capital into that high yielding environment that the profits from that go into the Bitcoin in that way. So it's kind of a consequential way of aggregating your Bitcoin stack. And that to me is much more impactful. And Warren's absolutely right. We're driven by, we've come up with this number, and I can see Warren's perhaps not saying it because we don't want to be tied to it in any particular way. But like for us, one Bitcoin equals, 5 to 8 African jobs. That's like back of a napkin math. Yeah. So, so if you take a look at it, I mean, every Bitcoin that we raise, but we're actually finding out that it could be a higher number depending on the type of SMMEs. So, that's what we want to show. We're driven by that. So as Michael Saylor is showing our Bitcoin hoard, I want to see a hoard of lives changed, right? So if we could, you can have a very capitalistic, clinical view of, look how much STRC I bought, look how much Bitcoin I've acquired. I'd love Warren and I to sit down one day, 5 years from now and say, hey, look, we turn around, we changed 1 million people's lives in Africa. If 200 Bitcoin results in 1 million people in Africa being impacted, that's okay for us. If 2,000 does that, if 100,000 does that, doesn't matter. That number doesn't drive us. It's how well we can utilize it in our engine to really have impact on lives at the end of the day. Because when he founded the company, what pulled me into the company was his conviction. That like SMMEs in Africa are unaddressed. Banks won't look at them. They don't have to look at them because fiat yields are so high. You can get a 20% per year bond. Why would you fund an SMME? It's just not. SMMEs are being funded like 28 to 35% in South Africa per annum. And when he told me the story around this, I could really relate to that because I've always built businesses in South Africa and I've been a funder of technology companies. So he's really cracked something that's very unique here from a private credit perspective. And even private credit, like the way private credit's spoken of in the Northern Hemisphere, it's like this opaque, broken thing. And we get that because people started selling private credit bonds to retailers, right? And like to the retail market, and that was crazy. I mean, that they just like refinancialized. Private credit doesn't look and feel like that in Africa. Private credit is what saves Africa. If we don't do this, there'll be anarchy on our continent. You know, our unemployment rates are not sustainable. So if you were to ask me what drives Warren and I, is when we see youth unemployment in South Africa sitting around 70 to 72%. That number drives me. If we see the total unemployment figure sitting close to 50% in our country, if not north of that, that drives us. What drives us is seeing people we grew up with having great ideas, very smart, but they just don't have access to capital because it's not possible. That drives us. So I think there's a different set of values that drives us in Africa than pretty much a lot of what you see the other Bitcoin treasury companies do and say. So when we sit down at the conferences and we speak to them, with them, we can see a very capitalistic outcome that we're driven by completely different. We're driven by the humanity impact. That every day we wake up thinking, okay, how can we make loans cheaper, more sustainable? That's our drive.